Combining the liquidity concept with order blocks enhances our understanding of market dynamics and provides valuable information for strategic decision-making. Grabbing liquidity in the direction of the current trend before reaching a supply and demand area improves the quality of that area. There are 3 common liquidity grab patterns that happen every day on the chart. Forming each one before reaching our order block increases the chance of success for our trade. Let's start with the first one. The first liquidity grab pattern is when we have fair value gaps and an order block zone precisely below our demand area. So, there is a high chance that the first demand area becomes the victim of a liquidity grab movement, and then the price takes off when it reaches our order block zone. This will make our order block zone even more powerful, because right now, the market contains the required liquidity for future movements. For example, here we have a demand area and a potential trading opportunity to go long. But looking at the left side, we can spot this gap between the candles, precisely below the demand zone. Now this gap will act as a magnet for the price to come and fill it, restore the balance, grab the liquidity, and continue pushing upwards when it mitigates the order block. So here comes an important point. Before placing any trade, you should look at the left side to see the market structure conditions to avoid this kind of unnecessary risk. So, when this kind of scenario forms on the chart, there's a higher chance for this move to be just a liquidity grab and does not necessarily mean a reversal is coming, making our order block zone more powerful and a perfect trading opportunity to go long. The second liquidity grab pattern happens by forming equal highs and lows. Equal highs and lows are interesting trading areas for traditional support and resistance traders. In the bullish scenario, below the equal lows contain lots of liquidity. If the correction move consists of this kind of support area, this is another confirmation that the conditions are ready for smart money to grab the liquidity and continue pushing forward when the price reaches the demand zone. The same concept is applied to the bearish scenario. Above the equal highs contain lots of liquidity. If the correction move consists of this kind of resistance area, this is another confirmation that the conditions are ready for smart money to grab the liquidity and continue pushing downwards when the price reaches the supply zone. Defining precise rules for every scenario that happens on the chart is tough. Yet, as you engage in backtesting and live trading, the key lies in adjusting your trading system to align with the optimal conditions that work most effectively for you. Backtesting is necessary to obtain the performance of a trading setup, but